Hello everyone, welcome to Parwaaz Academy. Today I have this question to solve. Let's see what this question is asking about, and if you have not hit the subscribe button, please hit the subscribe button on my YouTube channel as well as on my page on Facebook. So let's start with the question. The question says a business purchases machinery on credit. Applying the golden rules of the traditional approach, what is the correct action for the machinery account? So you have been given that you should apply the golden rules of the traditional approach, and you have to choose the right option. First is credit all incomes and gains. Second is credit what goes out. C is debit the receiver, and D is debit what comes in. So before going to the answer, I would like to explain few things here. The first thing that I need to explain here is that there are two types of approaches that we use in accountancy. One is called traditional and one is called a modern approach. I'm not going to discuss modern, but about traditional approach, you have to remember 2-3 things. Under traditional approach, accounts are classified into 3 types of accounts. One is personal. Let me first take the pen from here. Okay. One is personal. Under traditional approach, we have 3 types of accounts. One is personal. Second is real account, personal account, real account, and third one is called as nominal account. Third one is called as nominal account. So this is the classification that is called as traditional classification or traditional approach. Now, what are the golden rules that we apply in this case in the traditional approach? There are 3 accounts and 3 types of rules are there. For the personal, there is a rule that says debit the receiver and credit the giver. Debit the receiver, debit the receiver, and credit the giver. In real account, debit what comes in and credit what goes out. In this, debit what comes in usko debit karna hai, credit what goes out. Then nominal account, debit expenses and losses and credit income and gains. Credit income and gains. So first of all, in this question we need to see what type of account is the machinery account. If we talk about the machinery account, machinery is the asset. So you have asset here, and machinery comes into real account. Machinery account is a real account because we have the machine, that is the asset. So it comes under the real account. So what will apply to the real account? As I just told you, debit what comes in and credit what goes out. Since machinery is coming to the business, so debit what comes in, this would be the correct option. Debit what comes in would be the correct option. So you have to remember these rules. These are very important. So golden rule for real accounts is debit what comes in and credit what goes out. Since machinery here is coming into the business, so we will debit the machinery account and credit the creditor account. So I hope you guys have understood this concept. So if you have understood this, please hit the like button and also subscribe to my channel for more such videos. And if you have any question, comment the question and I will try to explain that for you. Thank you for watching. Hit the like button as well as subscribe button. Thanks.